But pay attention to this. There's a very good setup right now for a counter trend rally in the dollar. It's also one of the most least expected trades that are out there right now. When nobody expects things to happen, that's when things tend to kind of work against you. But let's talk a little bit about what you need to know before the bell this morning, because this is also going to tie into the government shutdown. The U.S. dollar. The U.S. dollar has actually been an important topic that is not getting very much attention, and you should be paying attention to the U.S. dollar. It has a lot of impacts to a variety of different markets globally. And importantly here, the dollar, while it's been weak as of late, has been putting in a very long basing period here for the dollar. Now, there's a few things that are important to understand about what the weakness in the dollar has been contributing to, and also what a reversal of that dollar strength will mean for markets in particular. Multinational companies that sell goods or products or services overseas receive a benefit of a weaker dollar in terms of their profit margins because of the trade, right? If our dollar is weaker, and again, so let's really quick back up and define what we're talking about when we talk about a weaker dollar. All we're talking about when we say the dollar is weaker, it's only weaker relative to another basket of currencies. So our dollar is currently weaker than, say, a basket of the euro, as an example. So if I live in euros, right? If I live overseas, I live in Europe, and I'm trading in euros, I can buy more goods or services from U.S. companies right now because my currency is stronger than the U.S. dollar. And so when you talk about the dollar itself, the dollar is not something that just lives in isolation. It is relative to other currencies. So is another currency stronger right now than the U.S. dollar? Yes, so the trade basket of currencies to the U.S. dollar is stronger, and that's why we have a weaker dollar right now. That's a benefit for multinational exportation companies in terms of their profit margins. If that reverses, some of that benefit will go away, and we could see weaker earnings in the future again, see profit margins compressed. And this is one thing to kind of watch right now, because corporations are running fairly high profit margins, but we are seeing some deterioration in those profit margins as the economy is starting to show signs of weakness. If you get signs of economic weakness and a rally in the dollar, then of course that's going to impede those profit margins more. So pay attention to what's going on with the dollar here. This basing period has been very, very long here, and we're starting to get some negative divergences really kind of across the board in the dollar. If we move this out just a bit and take a look at a weekly chart over the last kind of long period here, what we've got going on is we've got a very strong rally in the dollar. We've got this rising bullish trend line in the dollar. So the dollar remains in a very strong rising bullish trend right now. We are sitting right on the top of that trend line. Every previous period that we've been as oversold as we are right now has led to a fairly strong reversal rally in the dollar. And particularly, again, as I said, we're starting to get some negative divergences. We've got a buy signal in the momentum indicator. We've got a negative divergence. We've got stronger relative strength, even though the dollar hasn't turned up yet. So we're seeing some accumulation of the dollar below the surface here. The impacts of that is if we see a rally in the dollar to about 102, that's going to trigger a couple of different things. First of all, there is a very, very large short position against the U.S. dollar. We've got one of the largest short positions against the dollar right now, kind of in history, so to speak, as a lot of CTA, these computerized trading algorithms, hedge funds, etc., have been shorting the dollar here for profit, right? So again, they just simply do this to hedge profits, etc. A very, very large short position here. So if the dollar rallies, those shorts have to cover. That's going to also help support a stronger rally in the dollar, something worth paying attention to. Secondly, any asset that trades in dollars, so you think about commodities, you think about U.S. bonds, etc. If the dollar begins to rally, that's going to attract foreign inflows into assets that potentially are a reserve currency hedge. Again, if I live in euros and I'm storing my reserve currency, I'm going to restore it in something that's going to benefit from rising dollar. That would be U.S. Treasuries and a stronger position in the dollar. That also fuels that rise in the dollar. So you've got a few tailwinds here that potentially, as the dollar strengthens, and again, you have to think about this from international trade perspective. If I live in euro and the dollar begins to strengthen, that means my currency is declining relative to the US dollar, that makes adjustments in where I'm storing my reserves. I have to hedge off that currency risk to balance trade. And this is why currency is always an issue to pay attention to between two countries, because again, that all comes down to a function of trade. But pay attention to this. There's a very good setup right now for a counter trend rallying the dollar. It's also one of the most least expected trades that are out there right now, which is actually a really good setup for it. So again, when nobody expects things to happen, that's when things tend to kind of work against you. But that has impacts potentially for the stock market, for the bond market, for commodities in general. So pay attention to this dollar. It will be important when it occurs. All right, that's what you need to know before the bell this morning.